All right, welcome back to Talk Tickers, the only show that cuts through the noise and gets you right to the core of what's actually happening in earnings calls.
You got it. We dig deep so you don't have to.
Today, we're diving into the Cormedix Q4 2024 earnings call. So, let's kick things off with the big picture. How'd they close out the year?
Well, they finished strong, actually beating revenue expectations.
Really? That's good to hear. Give us the numbers.
Sure thing. Their Q4 net revenue came in at $31.2 million, putting their full-year revenue at $43.5 million.
Okay, and to put that into context, wasn't 2024 their first full year selling DefenCath?
Absolutely. It was the first full year with DefenCath sales contributing to the top line. So these numbers give us a much clearer picture of the drug's commercial performance.
Got it. So what else jumped out at you?
Well, there's one thing I know you'll be interested in. They actually hit a big milestone this quarter, their first profitable commercial quarter.
Okay, that's huge. I mean, turning a profit is the goal, right?
Yeah.
What were the specifics?
They reported a net income of $13.5 million, which translates to about 22 cents per share. And they also had a solid adjusted EBITDA of $15.3 million.
That's impressive. So where's this growth and profitability coming from? Did they break that down?
They did. It looks like the outpatient segment was the primary driver. Specifically, they're seeing continued success with DefenCath at US Renal Care, which we've discussed before.
Right. I remember that name. They were one of the early adopters, right?
Exactly. And it seems to be paying off for them. On top of that, they're also starting to ramp up implementation at some mid-sized customers, like IRC and DCI.
Okay, so the momentum is building. Anything else contributing to the positive picture?
Yeah, they also mentioned seeing good utilization from a bunch of smaller outpatient dialysis centers. So it's not just the big names.
All right, so pretty solid foundation then. Let's shift gears to the future. What did they have to say about the outlook for the coming year?
Well, they gave some pretty strong guidance for the first quarter of 2025.
Okay, I'm all ears.
They actually started the quarter with more than $25 million in purchase orders, just from their existing customers.
Wow, that's a nice starting point. What kind of revenue are they expecting from that?
They estimated net revenue from existing customers to exceed $33 million just in Q1. And looking a little further out, they're projecting between 50 and 60 million for the first half of the year.
So strong recurring revenue stream then. That's a good sign for investors, right?
Definitely. It shows they're building a sustainable business model, not just one-off sales.
Okay, so everything's coming up roses. No potential headwinds or challenges on the horizon.
Well, not exactly. They did mention anticipating some price pressure on DefenCath starting in Q2 2025.
Price pressure, like what?
It sounds like they'll be offering discounts and rebates off the government's ASP, which stands for average sales price.
Right, the benchmark price for government reimbursement. So that makes sense. Anything else?
They also threw out the possibility of a shelf stock adjustment in Q3, which could also impact revenue.
Shelf stock adjustment, that's when distributors adjust their inventory levels, right? Which can affect sales in a particular quarter.
Precisely.
Okay, so while the volume growth is encouraging, it sounds like we need to keep an eye on those pricing dynamics. Now, we talked about the outpatient segment. What about the big fish, the large dialysis organizations?
Ah, yes, the LDOs. There's an interesting development there. One of their contracted LDOs has actually pushed their DefenCath implementation into 2025.
Really? That's not great news. What was the reason for the delay?
Apparently, it's due to some operational resource constraints on the LDO's end.
That's frustrating, but I guess it happens. Did Cormedix comment on how they're handling this?
They did. It seems like they're taking a very proactive approach. They had multiple meetings with the LDO in February and early March, walking them through how Cormedix can help with training and the whole implementation process.
Okay, so they're trying to smooth things over and get back on track. What's the timeline looking like now?
They're hoping to see orders and actual utilization from this LDO by mid-year.
Fingers crossed. Did they say if this delay would affect the overall volume they're expecting from this LDO?
Well, they haven't received any indication that the anticipated magnitude of use will change, but they did acknowledge that it's a possibility it could go either way, higher or lower than initially projected.
All right, so a bit of uncertainty there. Now let's switch gears again and talk about the inpatient segment, hospitals. What's the latest there?
They are seeing some good things on that front. DefenCath usage is increasing in a handful of larger hospitals, which is encouraging.
That's a good sign. Any significant strategic moves in this segment?
Actually, yeah. They're implementing a brand new commercialization strategy for the inpatient market. They've partnered with Cineos Health to build a dedicated inpatient field team.
Interesting. So a team specifically focused on hospitals. What's the thinking behind that?
Well, it seems like they recognize that selling to hospitals is a different ballgame compared to outpatient clinics.
Hmm.
This new team is experienced in navigating the whole hospital formulary process.
Right, the process by which drugs get approved for use within a hospital system. So a very specialized skill set.
Exactly. And they're not stopping there. They've also teamed up with WSI for marketing and promotional activities, but specifically targeting Veterans Administration facilities.
VA hospitals. That's smart. A large, concentrated market with specific needs.
Precisely. And it sounds like they're not wasting any time. The new inpatient sales team is almost fully staffed and expected to be out in the field within the next 4 to 5 weeks. WSI, on the other hand, has already kicked off their promotional work at VA facilities.
So a two-pronged approach. All right, give me the numbers. What's the impact of the inpatient segment right now, and what are their expectations?
Sure. Right now, it's a relatively small portion of their overall business. In Q1 2025, inpatient represented about 3% of their total unit volume and 4 to 5% of their revenue dollars.
Okay, so still early days, but what about the future? Where do they see this going?
They have ambitious goals for this segment. Their target is for inpatient to reach 10% of the overall market unit volume by 2026.
Wow, that's a significant jump. So they believe they can capture a much larger share of the hospital market.
Yeah, they think 10% is their rightful share based on the product's potential. They're expecting meaningful growth in inpatient by the end of this year, with it becoming a much bigger contributor to overall revenue and earnings in 2026 and beyond.
So diversifying revenue streams. Now let's move on to the pipeline. They have a phase 3 study plan for DefenCath in a new indication. Tell me about that.
Yes, this is a big one. It's a phase 3 study looking at DefenCath for the prevention of CRBSIs. That's catheter-related bloodstream infections.
Right, a serious complication that can arise from having a catheter in place. What's the specific patient population for this study?
They're focusing on patients who are receiving total parenteral nutrition, or TPN, through a central venous catheter. Basically, patients who are getting their nutrition intravenously.
Okay, so a high-risk group. Where are they at with this trial?
They started the site selection process back in February, and they're aiming to begin enrolling patients in Q2 of 2025.
And how long is this study expected to last?
It's a 12-month study with a target enrollment of under 150 patients. Relatively small and quick for a phase 3 trial.
That's good. What's the timeline for potential approval if everything goes well?
Their goal is to finish the study and submit an NDA, that's a new drug application, to the FDA by the end of 2026.
Okay, so a couple of years out, did they mention any special designations they're seeking for this indication?
Actually, yes. They've applied for orphan drug status from the FDA for DefenCath in the TPN setting.
Orphan drug status, that's for treatments for rare diseases.
Right, exactly. If they're granted this status, it could come with certain benefits, including potential market exclusivity if the drug gets approved.
That could be a big deal. When do they expect a decision on that?
They're aiming for FDA approval of the TPN indication sometime in late 2027 or early 2028. And they've even given some initial estimates of the market potential.
Really? How big could this be?
They're saying the annual peak sales for DefenCath in the TPN market could reach $150 to $200 million.
That's a substantial new market if they can tap into it. So a lot riding on this phase 3 trial. Aside from this pivotal study, are they doing anything else to gather data on DefenCath?
Absolutely. They're also conducting a real-world evidence study in partnership with, you guessed it, US Renal Care.
Makes sense. They seem to have a good relationship. What are they looking at in this study?
They're evaluating outcomes in over 2,000 patients over a 24-month period, trying to get a real-world understanding of how DefenCath is performing in everyday clinical practice.
That's important data, especially for payers who want to see how a drug actually performs outside of a controlled clinical trial setting.
Exactly, and they're looking at a whole range of outcomes, things like the overall cost of care, infection rates, hospitalizations, patient mortality, lost treatment time, even the amount of antibiotics used to treat these infections.
So trying to paint a comprehensive picture of the drug's impact, and where are they at with this real-world study?
Data collection is already underway.
All right, so good progress there. What else is in the pipeline?
Well, there's also a pediatric study in the works. They're planning to kick off a trial looking at DefenCath in pediatric hemodialysis patients in Q3 of 2025.
So expanding into younger patient populations, did they give any details on that study?
They said it will be a smaller study. And because of the limited number of patients and the need to personalize treatment protocols, it'll likely take several years to complete.
Okay, so a long-term project. What's the rationale behind this pediatric study?
It's actually a post-marketing requirement under the Pediatric Research Equity Act. So they're fulfilling a regulatory obligation. They've already gotten the FDA to sign off on the study protocol, so they're good to go.
And lastly, on the clinical front, they mention an expanded access program. What's that about?
This is a program designed to provide DefenCath to certain very high-risk patients who haven't responded to other infection prevention strategies.
That sounds compassionate. Who specifically are they targeting with this program?
It's a mix of patient groups, pediatric TPN patients, those undergoing peritoneal dialysis who have stubborn infections, and also neutropenic oncology patients with central venous catheters.
So patients who are really struggling, is there much interest in this program?
Apparently, they've received a high number of requests for participation. It seems like there's a real need for this type of access.
And when do they expect to start treating patients under this program?
They're aiming to have patients dosed in Q2 of 2025.
All right, let's shift gears one last time and talk financials. What did they share about their expenses for 2024?
Sure thing. Their total operating expenses for the full year came in at $62.6 million. That's a 28% increase compared to 2023.
Okay, so expenses are rising. Did they break down where that money's going?
They did. And as you might expect, R&D spending actually decreased significantly. It was down 70% year over year, coming in at $3.9 million.
That makes sense given that DefenCath is already approved. They're not in heavy development mode anymore.
Exactly. But on the flip side, selling and marketing expenses jumped by 59% to reach $28.7 million. And general and administrative expenses also rose sharply, up 69% to $30 million.
So they're investing heavily in commercialization and operational infrastructure. Now, what about their cash position? How much runway do they have?
Well, they used $50.6 million in cash from operations during 2024. As of December 31st, they had $51.7 million in cash and cash equivalents on hand.
Okay, so a decent cash cushion, but burning through it.
But here's the good news. They're projecting to end Q1 of 2025 with at least $75 million in cash.
So an increase. How are they planning to boost their cash reserves?
They expect strong collections from accounts receivable, and they also mentioned some activity related to their ATM program.
ATM as in at the market stock offering.
That's right.
Okay. And what about their cash burn going forward? What kind of guidance did they give for 2025?
They're projecting cash operating expenses to be between $72 and $78 million for the full year.
So a bit higher than 2024. What's driving that increase?
They attributed it mainly to higher R&D spending on those new clinical initiatives we talked about earlier.
All right, makes sense. Now, they also touched on some broader market dynamics, specifically around TDAPA.
Yes, the transitional drug add-on payment adjustment. They had some interesting insights there.
All right, fill me in.
They highlighted a pretty dramatic rise in Medicare Advantage claims for DefenCath since its launch. They said it started at basically zero and has now reached around 40% of claims in early Q1 of 2025.
Wow, so Medicare Advantage is becoming a much bigger piece of the pie.
They think that trend's going to continue. They even suggested that Medicare Advantage could eventually represent up to 70% of the ESRD market.
ESRD being end-stage renal disease, for those who aren't familiar.
Exactly. And remember that real-world evidence study we talked about? Well, one of their goals with that study is to gather data to support direct contracting with Medicare Advantage plans once the TDA period ends.
Interesting. So thinking ahead to how they can secure reimbursement in a changing market, do they mention any other policy changes that could affect them?
They did. They brought up a recent policy change by CMMI, the Center for Medicare and Medicaid Innovation.
Ah, CMMI, always up to something. What did they do this time?
Well, they made a change to exclude TDAPA payments from the benchmarks used to evaluate kidney care entities.
Okay, and what's the significance of that?
Well, previously, these entities were somewhat penalized for using innovative therapies like DefenCath because of the way TDAPA payments were factored into their evaluations.
So this change levels the playing field and removes a barrier to adoption.
Exactly. Cormedix actually reported seeing a patient lift of about 15 to 20% at US Renal Care as a direct result of this policy change.
So a real tangible impact. That's good to hear. Did they say anything else about TDAPA?
They did. They expressed some optimism about potential future reforms to TDAPA, either through legislation in Congress or through changes to CMS rules. They believe there's bipartisan support for making changes to TDAPA to better incentivize innovation in the space.
So potentially even more tailwinds down the road. Now let's talk about manufacturing and supply chain. Any concerns there?
They actually painted a pretty reassuring picture. They said they have more than a year's worth of finished DefenCath product on hand based on their current run rate.
Okay, so well stocked. What about the raw materials?
They said they have plenty of heparin and taurolidine API, the key ingredients, to cover a significant ramp up in production. They also have multiple orders for taurolidine API placed for later this year, just to be safe.
Smart. Always good to have a buffer.
And they have 2 contract manufacturers for the finished product. One of them is currently underutilized, so they have the flexibility to increase production pretty quickly if demand spikes.
So no supply chain bottlenecks on the horizon. That's a relief. What about the reimbursement landscape? Did they address that?
They did. They've actually established a third-party hub called Prospectus to help healthcare providers with the whole reimbursement process for both inpatient and outpatient settings.
That's helpful. Reimbursement can be a real headache, especially for new therapies. What kind of support does this hub provide?
They said it covers things like benefits verification, billing and coding expertise, making sure providers understand TDAA, NTAP, and the relevant J-codes, and even help with navigating payer policies and state Medicaid challenges.
So a one-stop shop for reimbursement support. Sounds like a valuable service. Lastly, they addressed the recent concerns about potential bloodline shortages. Did they expect that to impact them?
They said no, they're not anticipating any impact on DefenCath utilization because there are 2 other manufacturers of equivalent bloodlines out there.
So a diversified supply chain mitigates that risk. All right, before we wrap up, let's do our This Is Not Financial Advice segment. Based on everything we've discussed, any outrageous but plausible trade ideas come to mind?
Let me think. It seems like the market might be overreacting a bit to today's news. They're focused on those short-term pricing pressures and the slight delay with that large LDO. But if you zoom out and look at the bigger picture, this is a company that's now profitable, seeing great initial uptake of DefenCath in the outpatient market, and has multiple potential growth drivers, both in inpatient and with the TPN indication.
Okay, I'm intrigued. Where are you going with this?
What if, and hear me out, what if the dip in price today actually presents a buying opportunity? I know it sounds crazy, but
I'm listening.
what if you consider a long position in Cormedix right now? That dedicated inpatient sales team is about to hit the ground running, which could translate into substantial growth throughout the rest of this year and into 2026. And then you have the phase 3 trial for the TPN indication, which, if positive, could open up a massive new market.
So the market's undervaluing the long-term potential.
Exactly. Now, this is definitely a speculative trade, heavily reliant on positive clinical trial results and successful execution in the inpatient market. But the potential upside, especially given where the stock is today, could be huge. Obviously not for the faint of heart, but potentially very rewarding for those with a longer-term investment horizon and a higher risk tolerance.
Okay, that's an interesting, albeit risky idea. Let's zoom back out. To recap our deep dive into the Cormedix Q4 2024 earnings call, we saw a company reporting strong revenue growth, achieving profitability, and laying the groundwork for future expansion. While there are some challenges to keep an eye on, the potential in the inpatient market and the progress in the TPN indication are certainly promising signs.
We hope this breakdown has given you some valuable food for thought. What were your biggest takeaways from this call?
And remember, everything we discussed is for informational purposes only. This is not financial advice. Do your own research, consult with a financial professional, and make informed investment decisions based on your individual circumstances.
Thanks for joining us on Talk Tickers. We'll be back soon to break down another earnings call and help you make sense of the ever-changing market landscape.
Until then, happy investing, everyone.